Hello, good morning everyone. Good to see a few guys on. Welcome to another Wealth Coffee Chat. Brendan, James, Chris, Rodney, Sean, Allison, Harami, Kevin, joining us from Florida. Great to see you again, mate. Hopefully the Australian ideas about property investing might be helpful all the way over there in the US of A. Morning, Donna. Good to see you guys, James. Welcome and welcome to another Wealth Coffee Chat. Thankful Thursday it is. Good to see you guys here. We're going through, on the back of another shift, Brendan. We're going through our 7 financial plans, or 7 plans, 7 investment plans that every property investor should know. We're on the back stretch now. I've done the others over the last week or so. So if you are joining us here and you go, oh, you're on plan number 6, Jason. I think it's number 6 today. Yep, number 6. Where's the other 5? Well, they've been in the last few days. So go check them out in the feed, usually in the Facebook videos, in the group, or in the page, or on the YouTube channels. So there you go. But today we're talking about the financial plan. And we'll talk about that in a minute. After some quick intros, we're going to talk about what that means. But anyone who's new, good morning, Raylene, Jay. Let us know. If you're new, you might have just joined our mentoring program recently. You might have wandered by and found one of the channels. Let us know in the chat. Say g'day. Good to see you if you are new, and welcome back for the people who are always here. We've got a few regulars on as always. Good to see you guys. Let's dive into it. The financial plan. It's probably the most confusing thing for most investors, I believe. I've been helping investors over 18 years, investing over 20 years myself in property, and along the way I've been involved with and helped create property investment plans, acquisition plans for people, well over 7,000 acquisition plans. And often what I find teams sitting down with property investors and they want to get going, they want to get started, they're a little confused or sometimes a little uncertain about the direction that they need to go in, or they want to go in, because they have, let's say someone like myself, a property investment coach, say, hey, listen, let's get on with it. We'll get you some finance. We'll get you ready to buy, and let's go acquire. Excuse me. Then they ask their accountant, and their accountant's like, whoa, hang on. I'm not quite sure about that. They're very conservative people by nature. They look backwards, not forwards, and they're, losing their minds. And then they might even talk to a financial planner, and then the planner's like, whoa, like property, I can't give advice on property, et cetera. So Rosalind said no volume. Can you guys let me know if it's me at my end, or is it Rosalind? I can see my audio stuff going here, so it seems to be working for me. All good. Okay, sorry. Rosalind, you never know with this stuff, Rosalind. Like, so many buttons and things to press in my little studio here. I'm like, what have I forgotten to press? All good. Sweet as. So, often there are well-meaning people, well-meaning professionals who want to give you some opinions and advice. And to be honest, most of them are not investors themselves, okay? And this is where I sort of, it's like a little warning. Yeah, I do not take advice from people who aren't into property investing. My accountant invests in property. My financial planner invests in property. My finance broker invests in property. My business advisor invests in property. I have no interest in getting support and advice from people who aren't into the asset class that I've chosen to create the majority of my wealth in. So it's a little caveat this morning. I'm not a financial planner, so this is not financial planning advice this morning, but I'm going to talk about some key things that I've seen, over thousands and thousands and thousands of property investors, and some things that are pretty important to get into a financial plan, because a great financial advisor, and we do have some that we use, they are amazing, know what to do for you, and they're an important part of your 6-star team. Remember our 6-star team. So let's talk through that this morning. What is the 3 parts of a financial plan, the really most important parts of a financial plan when it comes to us as investors? Okay, there's 3 pieces to this puzzle that are at the center of what we need to understand. Oh, there's going to be a question mark. What do we need to understand when it comes to your world of having a financial planner on your team and them helping you as you go? Absolutely, Brendan. You've got to surround yourself with people who understand and believe in the direction that you're going in. Okay, it's a stupid moot point to argue that property investing is better than shares, or shares are better than property. I think that's the dumbest conversation on the planet. Avoid it like the plague. Both are good. Both are perfectly fine. Wealthy people have become wealthy with property, shares, and business. You might mix the 3, or you might choose one. When you do it, just get on with it, right? Don't get confused because someone else has done it another way and then you think, oh, that's better, all right? Boom. We're choosing property. I like property. I love property. And I like business. So my 2 combos are property and business. Maybe yours is career and property. A great career, a great employed career. So many successful property investors come from the employed career world, creating massive wealth in their real estate investment portfolio. It's good stuff. Anyway, let's have a look at the 3 parts that are really important to the financial plan. The first part is extremely important. A good financial plan and a good financial planner must help you with protecting your family's wealth and assets. Protection. Now, I'm not going to harp on about it this morning, but it's vital that you speak to those professionals and understand the risk in the world that you are taking. We as property investors, what's the major risk we are taking? Let's just say, worst case scenario, something happens to you, and you are, one of the major earners in your family. Some of you might be single parents. You might be the major earner in your family. You might be the only earner in your family. What happens if one or both of you are not here anymore, or are hurt, or have an issue? Now, it's not a great thing to talk about, but it's a bloody important thing to talk about. And any mature adult human must understand that shit can go wrong sometimes, and you want to have some protection in place. That means insurance, team. That means insurance, all right? What's the big risk that we take as investors? We borrow a lot of money. Most of you, once you've got your investment portfolio going, you'll have $2, $3, $4, $5 million worth of good debt at its peak. And an owner-occupier home, obviously, and other things, incomes and whatever. And you should have the appropriate protection in place to make sure that that stuff is taken care of if you have a challenge or an issue. Speaking to the right financial planner to do the right financial plan is vitally important, okay? That is what we need to be able to do, okay? The next part that your financial planner or financial plan should understand and absolutely crush and maximize is the ability for you to grow your super. Tell me in the chat right now, what is the number one amazing thing about your super the whole way through, but at this idea of down here, you guys have seen this before in the lifestyle, at a certain age, what can you do? What can you create from your super? And it's the only vehicle available to Australian taxpayers right now that has this in its special source. Tell me in the chat right now, what is it? What do we get if we create a significant investment portfolio / balance in our super? What's the amazing upside? Boom, Pritesh on it. Boom, Chris on it. 0% on capital gains tax and income tax up to, at this point, $1.7 million worth of assets. Team, no tax. Like, that's amazing, right? And that's at a certain age after retirement, and between when you start working and otherwise, it's low tax. 10% capital gains tax and 15% income tax contribution on the way through. Absolutely powerful, massively powerful. It's huge. It's huge, right? So tell me right now, how do you get $1.7 million into super? If you don't have a plan, if you don't have a $1.7 million super plan, right, your financial planner is rubbish. I'm telling you right now. If you don't have one of these right now and they go, we know how to get you, here's the plan to get you 1.7 mil into your super, right, sack them. Get rid of them. They don't know what they're doing. They're flogging you some mutual funds shit, all right? Anyway, I'm getting pumped up. Get a better one. When you talk to a planner, go, right, I know I need to protect my assets. I know the big kahuna is 1.7 mil in my super. Another 1.7 for me and the missus, that's 3.4 million. What's the plan? How do we do that? Show me. And if they can't show you, they're not investors, they're product pushers, right? Away we go. Protection. Grow your super, $1.7 million plan. And what they have to know is they have to know how to apply the legislation. Right. Hopefully you can read that. Apply the legislation. Tell me in the chat right now, what are the things, legal legislation things, that you know about right now? 1.7 per, Lauren. Yeah, 3.4 between a couple, right? And did you guys know, just so you know, the interesting thing in super, how many members can you have in a super fund, a self-managed super fund? How many people, contributors to a super fund, and how many super funds, self-managed super funds, can you have? Tell me that in the chat right now. These are the interesting things that that you can do. Boom. Rosalind's on it. Rosalind, you can contribute money as a legislation thing. It's called the downsizer contribution, right? Boom. Downsizer contribution. If you sell your own home, let's say you're 55, 60, and you're doing the PPR, principal place of upgrade strategy. We've talked about this, right? Upgrade your principal place of residence continuously to get the best value quality property in the future. Because why? Because it's capital gains tax free. You heard it, right? So if you sold the property and you don't have a certain balance, you can contribute an amount of money into super. And it's fantastic. What's another one? There's a concessional contribution or a non-concessional contribution that you can do. There are bring forward and carry forward contributions. There is rollover relief. There is a business rollover capital gains tax relief if you're a business owner. There are so many pieces of legislation that you need to know about. When you sit down with your financial planner, say this, all right, tell me the top 10 pieces of legislation, tax and super legislation that we are going to work on that you now know we create our plan around. We create our plan around getting me this money in here. That's it, folks. Right? Now, what you do with that money in there, maybe you buy some, maybe you've got a share portfolio, maybe you diversify a bit, maybe you buy a couple of properties in there, who knows? Whatever that is, that will be another discussion for you and your team. Hey, Mr. Financial Planner, Mrs. Financial Planner, Ms. or Mr. whatever it is. Tell me, when you're applying the legislation to my situation, how many things do you know about that can help me do this, and along the way you need to protect me? Give me that plan. Folks, that's what you need to ask them, okay? In this space, let's not get confused when they're talking about all this other rubbish, the share market and this and that. Like, they like to baffle you with bullshit. That's not the conversation. The conversation is, all right, what pieces of legislation do you know that we're going to go after? I've got 16 right here. PPR upgrade strategy, which is contribution. Small business capital gains tax concession. Do you know about that? Right? Capital gains tax free if you're a business owner. 1.7 million into super. A capital gains tax relief rollover from a business sale, right? Debt recycling shares, debt recycling property using your super. $110,000 tax-free setup plan in here, right? Concessional contributions, carry forward contributions, non-concessional contributions, business exits, partial and full, business ownership, super ownership of your business property. Team, that's just 16 that I know about, that I've used. Does your financial planner know about those and have it in the plan to make this a reality? Good question. Ask them. Get them to put it on paper. Tell them, ask them what they know, all right, along the way. Because for all of us, this is extremely important. Because along the way, with our acquisition, our consolidation, our lifestyle, the financial plan forms the foundations of us being able to do this well over here, because you must be structured well and you must do things, certain things at certain times by certain amounts, etc. The legislation, it drives me bloody insane, right? Like, why make the legislation so complicated that you've got to pay tens of thousands, sometimes even hundreds of thousands of dollars to bloody retire? It's ludicrous. Anyway, don't get me started on that stuff. There you go, all right? The financial plan creates a great foundation of safety and tax efficiency and timing plans. So when you get your acquisition mojo on, you've got your investment properties going on. How do I own them? How do I then debt reduce? And then how do I maximize my value and my wealth? How do I protect that accelerate that, maximize that. That's what a good financial plan can do. And it's important to get it dialed and get it right. So there you go. Plan number 6 done. Tomorrow, we're going to do plan number 7. Actually, I won't be doing it tomorrow. I'm going to Sydney. Alison, we're going to Sydney. Hope you're packed. Looking forward to it. I'm going to Sydney. We are going down to support a charity that we get involved with, Powered by Purpose, a charity called Room to Read. We build schools. I've built 17 schools now. 6,000 kids go to school every day through the work that we do here at Positive, and many of you guys as our clients in mentoring have contributed by joining our programs. We call it Pay It Forward. So good. So we're going down on Friday, so I won't be doing Wealth, Wine and Wisdom or Wealth Coffee Chats tomorrow, which is Friday. I'm a bit disorientated with the days. Anyway, there you go. So on Monday, we'll be back at it, team. And on Monday, I will be doing the acceleration plan for you and I when it comes to our property investment plans. That's it. We're done. Wealth Coffee Chat done for the day. Hopefully that was useful. And when you're chatting to, if you want a great financial planner, reach out. We have 2 awesome team members that we have worked with for many years. Anthony Wolfenden, who is now part of our tax team, and Andy Fenton. You guys know I do Wealth, Wine and Wisdom with 2 absolute gun planners who know this stuff backwards. So let us know if you need a contact. Connect with your coach. We'll introduce you to those independent business owners. Away we go. So thanks, Steve. Yeah. When you take care of your own stuff, you should think about maybe paying it forward a bit. I've been very blessed in my life. Absolutely grateful for it all. And it's really nice to be able to do something like that for sure. All right, team. You guys are awesome. Thanks for hanging out. Wealth Coffee Chat done and dusted. See you on Monday, not tomorrow. Adios, team. Bye-bye.